Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today in the Economy Show, we're going to break it up into our normal 5 parts. And the first one's going to look at, what is happening with daily activity, what's happening with the vaccine rollout, where are we with COVID. The second is going to look at some of those leading indicators in the U.S., what's happening with inflation, deflation, stagflation, how is this going to kind of shake out. The third part is going to look at small businesses, jobs in the U.S. The fourth, we'll look at Europe, what's happening with retail sales, industrial production, those different things. And then the last section is going to look at Asia, Asia in general, but we're really going to hone in on China and India, looking at how have things shifted within Ladakh, within Sikkim. Is there any real adjustments? Where are they on a military level? Just because these are things to consider as we head into the spring thaw. And then obviously reviewing some of the economic data and some of the things that we've seen coming out of China and India on the industrial side. So just kicking it off here, again, like to remind you, please like, share, subscribe. These are things that help us keep it free and enjoy the engagement. So this is looking at just what is happening with the development, who are the developers, how many doses are expected, and then what is the end destination. So you can see AstraZeneca is a big chunk in terms of not only into India, but also the US and EU. There's been some holdup due to some concern about numbers. What does this mean overall? And that will start to come back. The Novavax is going to be a bigger one because most of that is supposed to go to India. There's now concern about what is the efficacy, how is this going to work going forward. That has started to be addressed. And then obviously we have Pfizer, which continues its pretty aggressive rollout with Moderna heading into both the EU and the United States. So that's why we have very specific areas that are seeing some rollouts and some increases in vaccination. And it's really the US and EU that have seen the biggest component in some parts of the Middle East. But that will start to expand over the coming weeks. COVID, where vaccination intentions declined, it's just something where people are concerned about, some of the effects, some of the hesitancies to getting it. Again, this will kind of slow down some of these impacts. But the bigger thing, and just to talk about this for a second, is not just, whether you're going to get the vaccine or not, but if it's available. And now we're getting some shifts in terms of what is the demand. And what do I mean by that? So typically you get your first dose, then 2.5 weeks later, you get your second. Now that is getting pushed further and further out with the idea that they want to get as many people their first dose and then worry about the second dose, which if you look at the data that we currently have available, that's really not the way this is supposed to work. So there's some concern on, does it make sense to slow the first dose and try to get everybody in their proper level of protection? Or, some of these, again, these are things that are going to be a bigger problem. And then, China's had a surge in cases where China has now introduced its strictest lockdown measures since the beginning of the pandemic. Travel restrictions now affect 23 million people ahead of next month's Lunar New Year holiday. Again, this is a huge holiday where a lot of mass migration happens, where city workers go back home across the country. Again, mitigating this is going to impact diesel, jet, gasoline, just having those big hindrances in general, which again is going to impact not only energy demand and refined product demand, but also economic activity, which is something to consider as people are losing confidence in their government. Now, when you look at where will you get a vaccine, it is tightly correlated to who has lost confidence in their government. So unfortunately, this is a separate slide where from May to Jan 2021, the UK is now 15%, Canada is 12%, South Korea is almost 20%, India, US is about 10%. These concerns continue to rise where they're trusting the government less and less, and it's starting to show up in here as well. Now, when we look at some countries, again, looking at how they're trying to inoculate, that we're seeing the shift in policy where how are we going to get that rollout? And here you can see obviously US, Britain, Germany. India is the one that has yet to start because they haven't started getting their vaccines. China plans to inoculate 3.5% or 50 million by early February, but now there's a concern on the efficacy of their vaccine, where Brazil is being told it's about 50% effective. So you have a coin toss of if it'll work or not. Not exactly comforting odds. But the biggest component will be US, Britain, Germany, France. You can see France has been slow. Germany aims to vaccinate 12%. The question is going to be, how many doses are you giving out, and why is that important? Well, let's look at the advice given from the manufacturer. So the manufacturer is saying that you should get your second dose in 2.5 to 3 weeks. So just to give you an example, my mother and father have both gotten their initial dose, and they are given a card of when you got your initial dose, lot number, manufacturer, and then you have to get the same manufacturer and they give you a 3-day window that is about 2.5 weeks after, within the Pfizer, the biotech Pfizer, essentially what they recommend. Why would you ever trust the WHO? But anyway, they say that the intervals can be 6 weeks. The UK government is currently pushing 12. Now, again, do you believe the people that came up with it and tried to test it in a specific way? Or are you, and again, coming to the lack of faith in some of these governments, as you continue to see that extension move out to try to get everybody first dose. Now, is there any empirical evidence to show, well, where's the testing? Well, let's look at the efficacy leading the vaccine difference. So after the first dose, Oxford Zeneca, 73%, Pfizer, 89%, and then 21 days after the first dose, according to the exploratory analysis conducted by AstraZeneca, between day 15 and day 21. But again, for that, he said that it has no evidence that the protection lasts beyond 21 days. Again, these are things to consider. After the second dose, which is less than a 6-week gap, 70% on Oxford AstraZeneca. That's what they're retesting. Pfizer, you're at 95%, which is where they got the 95% after the second dose. After a second dose of a greater than 12-week gap, there's really no data for Pfizer, and they're saying antibody levels were found to be almost 3 times higher than for participants who had the second dose jab under 6 weeks. So there's benefits on the AstraZeneca side that this may work, but again, this has not been rolled out yet. That's why there's some concern, but that's where we're starting to see this extension of doses, because in the U.S. we currently have Pfizer and Moderna. Now, when we're looking at vaccination doses per 100 people, this is as of January 11th. You can see that Israel is crushing it, but Israel is also the size of Rhode Island, so you get an idea of the ease, or it's a little bit easier on a logistical side. We're seeing that there is a lot of bottlenecks that currently are residing in areas as big as Texas and as small as some of the states on the Northeast. So the question is going to be, how quickly can we start to ramp this up and try to get people vaccinated? And then now we're starting to see, the goal was in the U.S., keep doses in storage to make sure that we can fill and make sure everyone gets their second dose. That is now being abandoned. We're trying to push everything in storage into the market. And we're relying on at-time delivery, which, given the logistical problems with how cold these vaccines have to be, plus the logistical issues of just what COVID is causing in general, it seems to be risky. But again, here we are. So now, where is the global stock market? And the global stock market is at all-time highs because valuations are, again, 25% higher. This is why we keep talking about there's, vaccines, there's euphoria on vaccines. Everything's going to be fine. Everyone's great. Well, we're pricing in perfection, and are we going to get perfection on the other side? And as we look at confidence in governments declining, it's going to be a concern as we go forward. Profits have started to rally back, but when we look at profits, it's at the sake of we have less employees, less overhead. Prices are going up, and this is just looking at the price index. But when we look at prices that they're pushing through increases in prices, but forward PEs continue to go higher. Again, this is going to be something to watch as the global market continues to price in a very robust 2021. Now, when we look at the unemployment rate, the federal deficit, you can see that just in terms of the federal deficit, it has increased in a very big way if we look at the right-hand side in general. And then when we look at the unemployment rate, it continues to go higher. Again, these are issues that we continue to see as we continue to see the unemployment rate going up and essentially staying sticky, which we'll talk about in segment 3. But the federal deficit continues to go higher as a percent of notional GDP, which is, again, something to be concerned about as we look at how are we going to continue to stimulate. And everyone's like, well, we're reducing rates, but we're borrowing so much more that even though rates are down, we're increasing principal, so we're still maintaining a fairly stable interest expense at a lower rate, which is, again, that problem of how are we going to pay it back? How are we going to get back into growth as we continue to have this overhang of debt and across the board? And, well, let's look at some of these past ones. Now, this company has been very good at and has been really spot on looking at the 86 to 88 period of that kind of the double dip recession. And when we look at how it's tracking versus 2020 into 2021, we can see that it's moving fairly close to where things are when we start to look at ISM. So you can see on the top, we have the S&P 500. You can see where it's been, that we're going to, based on this, we're going to get another rally up closer to about 4,100. We're currently at 3,800 to give you an idea of where that move can go. It doesn't have to be exact, but it's something where, technically looking at this, we should see some push higher as we see the ISM manufacturing continuing to move up. It's essentially moving pretty closely in tandem where things were back in 87, 88. And then obviously we know that we had that big drop in terms of activity, in terms of just where the crash of 87 was. Will we get something similar? Again, the market is really pricing in a lot of everything going well, everything going in the moving in the right direction. And the question is how much exuberance versus everything else are we starting to see? And that's why we look at Euphoria. Euphoria is at an all-time high, or at least going back into 87. And this is, again, why we remain very concerned. That's, we have brokers that are short gamma. We have, and then on the other side, you have the retail consumer and along a lot of calls, short gamma. Like, there's a lot of euphoric moves in this world. And the question is there enough data to support? Is the economy enough to support it? And obviously inflation is pushing through. There's, everyone's saying, oh, well, inflation is moving up, but now we have the dollar above 90. We have a rally in the 10-year, but yet we still have stocks remaining, near the all-time highs as the euphoric moves. But at some point, is that economic data going to weigh and pull things down? That's what we continue to look for. This is looking at those nominal yields that we were talking about. We see that the nominal yields have continued to remain, in the U.S. about 1.12%. But when we look at real yields, which is factoring in for inflation, you can see that and then when we do it based on currency, you can see that the 10-year government bond real yields are really essentially negative, and again, which is pushing people into stocks. So yes, you're getting the euphoric move, but you're also seeing people incentivized to be in stocks and equities versus bonds, which again is this bigger problem as we head into an uncertain period with just a rise in cases and a decline in economic activity. And then when we look at just the virus restrictions, again, coming to those restrictions, we have Goldman Sachs that's saying that it's impacting global GDP currently by about 9%. And you can see that we had that dip down into January, and this doesn't even include the increase in lockdowns in China, which have only accelerated, again, moving things down, because China, remember, is supposed to be the poster child of growth in 2021. And that's why we keep focusing on China. We keep focusing on a lot of these different countries. And this is where we continue to see some of these pressures, which, and we'll talk about this in the inflation point, the UN Food and Agricultural World Food Price Index is back at highs that we haven't seen since 2014. And this doesn't, I forgot to update it ahead of today based on where the new prices are for corn, beans, and just food in general, that we continue to see this shift higher, which is again going to continue to support movements and ratchet up inflation. Russia's talking about increasing export tariffs. Again, there's a move to secure the fervor, secure your own, and then worry about exporting. And given the amount of issues with locusts and armyworms and just drought and flooding, we had a detriment to the just general food supply. France just had to cull 700,000 chickens. We have Germany reporting more cases of swine flu. These are things that, as you kill more of the meat stream, make meat more expensive, you're going to increase the amount of purchasing grains, and grains is already under pressure, again, being a much bigger issue in general. Daily activity indicators, again, here we're looking at just on the global aggregate. You can see just based on where we were in December and where we are to kick off January. As we talked about in the EIA show, we're just not getting back to where we were pre-Christmas, pre-New Year's Eve. It's just we think that we're going to level off at a much lower level to kick off 2021. And this looks at it a little differently. So the solid circles are January 6th. The outline circles are December 6th. So this is looking at a month. So you can see what a month change has done in terms of activity. And we've also seen those increases, or at least steady state in new cases, which again is going to keep pressure on activity as lockdowns remain in place. You can see France has shifted down. Germany has had the biggest shift down in just that economic activity. Japan, same thing. U.S. is kind of essentially staying in this bubble of not a strong number, but again, not a bad number in terms of that move, that shifting down. Italy, big shift down. UK, big shift down. And again, these are things that we're not going to see that snapback, which gives us pause on what Q1 can look like, and then what are we going to get in Q2. Now, when we look abroad and look more at the emerging markets, you can see that we do have these slowdowns in activity. India, you can see an increase in cases when we look from December to January. That has started to cool off a bit, but again, there's an increase in cases, which has declined activity slightly. The biggest one is really Brazil, which has been seen a decline. Russia, South Africa as well. South Africa being a much bigger problem when we're looking at some of the commodities in general. But again, we're seeing the issues not just hold to developed markets, but also emerging markets, which we're seeing here. The emerging markets, they had their holiday drop, and we're just not seeing that snapback as you're seeing South Africa, Turkey remained very low. And now, even some of the stronger ones, Chile, Saudi Arabia, we're just not getting back to those levels as India starts to roll over, as China continues to be problematic, which again leads us into that post-holiday slump, looking at the developed markets. And this is why when we look at how is the market priced, what is the expectation, we just continue to see those pressures. As really only Spain has gotten back above that 80% number, and everyone else is still averaging closer between, let's call it 60 and 70%, which is not conducive for economic growth, the consumer, seeing some sort of normalization, which again is going to weigh on GDP, the different components of it, and is going to, essentially slow us down. Now, could we make it up in Q3, Q4? Sure. But just what we're seeing right now based on new strains of COVID, as we've talked about in Ohio, they've identified 2 new strains. In Japan, they're concerned about 2 Brazilian strains that they found. The UK strain is obviously out there. These are concerned as it's a coronavirus. They mutate, they shift, they change. This is the concern that we have. And I think that there's a lot of exuberance as we look at, the Epsilon theory had a great report on the Ireland effect of what happened in Ireland with this huge spike. And by the time you recognize it, it's already too late to do some of these lockdowns, which is why when we look at China, they're being excessively proactive in locking people in their homes to mitigate them leaving their home and to getting food and medicine and whatnot, which again is something that we think is going to remain through the Lunar New Year and really limit the amount that people are going to be able to travel. These are things that we consider when we're looking at just where is the economy going to go on a global level, which is going to impact energy demand, refined product demand, and just where do we see the next 6 months.